In today's show, U.S. data inflation will be messy. In today's show, I'll be sharing the 5 things to watch out for in the Bitcoin market this week, and quoting crypto analyst TechDev. Bitcoin flipping $32,000 to $35,000 likely confirms the end of reaccumulation in this year plus correction. Most probable to occur, in my opinion, once both the 100-week and 50-week exponential moving averages are in this range. 100-week currently at $34,800 and the 50-week at $37,200. And fun fact, if you invested $1,000 in Bitcoin 10 years ago, you'd have $2,856,000 today. And another fun fact, it was exactly 5 years ago, the infamous Bitcoin photobomb of the Fed with the legendary yellow buy Bitcoin sign. And quoting Plan B here, problem with KYC, know your customer, is our private data is concentrated at one central party, one big honeypot that will be hacked. Government intentions might be good, but result is disastrous. KYC also makes sign-up time consuming. Also in today's show, crypto needs regulation to mitigate risks, says Bank of England executive, quoting him here. For me, it underlines the fact that we need now to bring in the regulatory system that will manage those risks in the crypto world in the same way we manage them in the conventional world. Also in today's show, Bitcoin potentially already in accumulation phase, gearing up for the next bull market, says analyst Benjamin Cohen, quoting him here. I would speculate that Bitcoin is, you could argue, either in the latter part of the bear market or at the beginning part of the accumulation phase for the next market cycle. On the macro scale, buying Bitcoin below $20,000 is a fairly attractive price, but in the short term, we could eventually see another leg down into a cycle bottom in line with the 1-year ROI. There certainly is a possibility that happens. Also in today's show, Bitcoin rally in sight as Bitcoin flashes a textbook bullish reversal pattern according to top crypto strategists. Quoting Kevin Svensson here, Bitcoin Adam and Eve is very clear. Looks like it's straight out of a textbook. This is a bullish reversal pattern. We'll also be taking a look at the overall crypto market. All this, plus so much more, in today's show. Here come the news alerts. I drop a brand new episode every single day. The goal is to get to 100,000 subs. If you like getting that crypto, be sure to smash that subscribe button and ring that bell to turn on all notifications to receive daily premium crypto news alerts every single day, just like this. Also be sure to check out Crypto News Alert Shorts. I release a new Shorts video every day here in the YouTube channel. And today's episode is brought to you by BlockFi, the #1 leading provider of financial products and services for crypto investors and the #1 platform to buy, sell, and earn crypto. And I've been getting a lot of questions lately. Is it safe to now use BlockFi with all the shenanigans going on in this bear market? And they recently sent an email to their customers entitled Earning Your Trust Through All Market Conditions, and they go on to share the following facts. They have always operated with a prudent and proactive risk management approach, including processing 100% of their retail client withdrawal requests. They also keep a sizable amount of collateral at hand, at least 10% of client funds. They have maintained a positive net interest margin, and they don't engage in speculative bets into DeFi protocols, and they have no exposure to Celsius and have never partnered with them. They are among the first to de-risk their credit and market risk exposure. So yeah, it is absolutely safe to invest in the BlockFi platform. If you're going to do so, use my referral link in the description right down below and claim your bonus of up to $250 in Bitcoin. And let's get this crypto, shall we? All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV. How's it going, crypto fam? Holla at your boy in the live chat. Now, as usual, we have a lot to cover, so let's dive right in with the 5 things to watch out for in the Bitcoin market this week, starting with the 200-week moving average causing headaches. That's right, at around 20,850 on June 10th, the weekly close was hardly anything special for the King Crypto, but the Bitcoin/USD pair still managed its best 7 days growth in several months. That's right, ending Sunday in a full $1,600 higher than its position at the start of the week. Bitcoin thus stalled progress not seen since March. The success did not last, however, as the following hours of the weekly close turned negative, and at the time of this recording, we're trading just above $20,400. And here you're looking at the Bitcoin 1-hour candle chart. The Bitcoin's ability to hold the current levels could be a key in deciding the mood this summer, as relief on global equities would provide an opportunity for crypto to erase some of its losses from the recent months. And commentators, including Trading Suite, Decent Trader, thus eyed the weekly chart with interest. As shared here, weekly look on Bitcoin futures. Current candle is set to close on a bullish engulfing bar above the Moonraker, and weekly VWAP. Momentum is turning up as well. If stocks continue to turn up and have a summer rally, Bitcoin and crypto should likely follow. Now, others were less enthusiastic, noting Bitcoin still had performed another close below the essential 200-week moving average, which is sitting at $22,500 in the current line in the sand. In previous bear markets, the 200-week moving average acted as general support level, with Bitcoin wicking below it briefly to put in macro bottoms. This time, however, it appears to be different, as 22,500 has been absent from the chart for about a month. As Steve points out here, Bitcoin weekly candle has rallied 15%, but it is still holding resistance under the 200-week moving average for 3 weeks. Lower timeframes are a bit more bullish. Indicators are cooling off, but the markets remain fearful. Will Bitcoin break back above the weekly 200-week moving average before the weekly close? And the answer is no. And zooming out, we have popular trader TechDev, who advocated a more optimistic outlook for the rest of the year. By the end of the year, he argued at the weekend a reclaim of further important WMAs should be a result, and Bitcoin ending its reaccumulation phase altogether. Quoting him here, Bitcoin flipping $32,000 to $35,000 likely confirms the end of reaccumulation in this year plus correction, most probable to occur in my opinion once both the 100-week and 50-week exponential moving averages are in this range. 100-week currently at $34,800 and the 50-week at $37,200, which you can see here in this chart. And elsewhere, continued asset liquidation from embattled crypto lending platform Celsius added to the selling pressure. As pointed out here, Celsius continues to send its remaining crypto assets to exchanges. A few hours ago, 2,000 wrapped Bitcoin was transferred from the main wallet, and after a series of hops, eventually hit Coinbase and Binance. Remaining key assets, 410,000 ST ETH valued at $479 million, and 16,000 wrapped Bitcoin valued at $342 million. Now for the next factor to keep your eyes out on this week in the Bitcoin market, relentless dollar is back as Asia markets dip. Also like to point out, this was shared by FX Hedge. It shows citizens storming the Bank of China and Shengzhou over frozen assets. And as I point out here, Bitcoin fixes this. And analyzing the situation, one analyst at trading firm The Rock described the US dollar currency index as about as extreme as it gets in terms of year-to-date growth. Quoting them here, based on the extreme rally so far this year, the US dollar currency index is now up 16% year on year. This is about extreme as it gets, historically speaking, and unfortunately, it typically coincides with major financial stress in the markets, a recession, or both. That's right, Bitcoin managed to buck its traditional inverse correlation to the US dollar currency index last week, climbing in tandem with the index, as you can see here in this chart. Now for the third factor to keep your eyes out on this week, and that's inflation tipped to provide a messy week. That's right, if that weren't enough, the age-old topic of inflation is apt to provide a further test of market resilience this week. Quoting crypto analyst Alex Kruger, themes this week: number one, CPI inflation, consensus is higher, 8.8% year on year, 1.1% month on month. My view comes in even higher, large dip gets bought. Number two, earnings, mostly financials this week, should be okay. And number three, European gas crisis exerts downwards pressure on risks, and the euro going to be messy. Now for the next factor to keep your eyes out on this week in the Bitcoin market, the MACD hints at a price bottom in progress. Quoting crypto analyst Dave the Wave, a Bitcoin capitulation of price when the weekly MACD is below the zero line has always marked the bottom. Now for the fifth and final factor to keep your eyes out on this week in the Bitcoin market, 2-month highs for the crypto greed and fear index. That's right, as a modest silver lining, the average crypto investor is slowly getting their confidence back. Building on the previous strength, the crypto market sentiment hits highest level since early May over the weekend and is now at currently 22 out of 100, which you can see right here in extreme fear. In fact, yesterday we were at 24, the same as yesterday, last week of 14, and last month at 12 in extreme fear. And while still in the extreme fear territory, the crypto greed and fear index's renaissance provides a clear contrast to the events of the past 2 months, during which it dipped to a low of 8 out of 100, below even some of the previous bear market bottoms. And now for an interesting fun fact, if you invested $1,000 into Bitcoin 10 years ago, you'd have $2,856,000 today. Not too shabby of an ROI. And another fun fact, that was 5 years ago today, of the infamous Bitcoin photobomb of the Fed with the legendary yellow buy Bitcoin sign. You can see here in this headline, someone held up a buy Bitcoin sign during Yellen's testimony to Congress. Classic. And before I break down next story of the day, crypto needs regulation to mitigate the risks says Bank of England executive. But first, let's take a quick look at the overall crypto market. As you can see, Bitcoin, Ether, many of the major alts are currently correcting. And in the red, we have Bitcoin down 3.5% for the day, maintaining just above $20,500. We have Ether down 3%, trading at around $1,150, while Binance Coin, Solana, Polkadot, XRP, and Cardano are all correcting and in the red. All right, now let's break down our next story of the day. Bank of England Deputy Governor for Financial Stability, John Cunliffe, recommended forming a set of regulations similar to conventional financial systems to tackle risks within the crypto economic system while improving investor confidence. Speaking at a press conference, Cunliffe highlighted the recent downfall of the Terra ecosystem, pointing out that cryptocurrencies that fail to maintain their value induce stress across crypto markets. And he compared his idea for crypto regulatory framework to similar instances in traditional finance, wherein regulators shelter investors from uncoverable losses. And he shared the following: "For me, it underlines the fact that we need to now bring in the regulatory system that will manage those risks in the crypto world in the same way that we manage them in the conventional world." Well, guess what? It's a different world, so how can you manage the risks the same way? Just pointing out the obvious. But while acknowledging crypto's real potential for use in the financial system, Cunliffe stated that regulations for crypto need not be fundamentally different from traditional finance. However, it may need to be applied differently while considering the underlying technology powering cryptocurrencies. Bank of England Governor Andrew Bailey stressed the need for the involvement of international bodies in borderless or cross-border trading of cryptocurrencies. Bailey said that the unbacked crypto does not have an intrinsic value, but can be better viewed as an investment. And on the other hand, the governor believed that stablecoins are better suited as a means of payment, adding the following: "I think cryptocurrencies and stablecoins, need a different lens, and that's what we are doing in terms of how we approach it." Now, a recent survey of almost 6,000 citizens conducted by Her Majesty's Revenue and Customs revealed that an average crypto asset hodler in Great Britain considers crypto to be a fun investment. Let me know your thoughts. Do you feel crypto investing is fun? Well, I know it is during a bull market, but do you feel it is fun also during a bear market? Let me know in the comments below. The report showed that 10% of respondents hold or have held crypto at some point in time, with 55% having never sold any. Hodl be thy name. It was also found that 52% of crypto investors have hodlings of up to 1,200 of 1,000 Great British pounds. So there you have it. And before I break down next story of the day, Bitcoin potentially already in accumulation phase, gearing up for the next bull market, says crypto analyst Benjamin Cohen. But first, let's take a quick look at the overall crypto market cap, sitting just above $915 billion, with $54.5 billion in volume. In the past 24 hours, the current Bitcoin dominance is 42.8%, with the Ether dominance at 15.2%. And checking out the top 100 cryptocurrency gainers in the past 24 hours, we have Chiliz leading the pack, up 6%, trading just above 10 cents, followed by Monero, up almost 6%, trading at $130, followed by Tezos, up 4%, trading at $1.67. And checking out the top 100 cryptocurrency gainers for the past week, you can see pretty much a sea of green. We have Quant up 34.5%, CVX up 35.1%, and Aave up 30.9%. And we already checked out the Crypto Greed and Fear Index, showing we're currently rated a 22 out of 100 in extreme fear. But all right, now let's break down our next story of the day. A popular crypto analyst and trader says the Bitcoin's bear market could be nearing its conclusion. That's right, in a new strategy session, Benjamin Cohen tells his 756,000 YouTube subs that he is looking at Bitcoin's running return on investment and comparing its current performance against the 2018 and 2014 bear cycles. And according to Cohen, Bitcoin's running ROI could gauge whether the leading digital asset is at the end of the bear market or at least close to that point. Quoting him here, the last time the 90-day running ROI got really this bad was all the way back in 2018, and then before that, it was all the way in 2014, neither of which necessarily marked the bottom, but both times it did it, you can see that we did eventually have another leg down into a market cycle bottom, which you can see here in this chart. Now, Cohen is also looking at Bitcoin's 180-day running ROI, which he says indicates that Bitcoin may be due for a final sell-off event before the King Crypto could gear up for its next market cycle. Quoting him here, we'll just pull up the 180-day running ROI because this one's probably the most interesting from this bear market perspective. It's been in a fairly brutal downtrend for quite some time, but perhaps the most interesting thing to do is compare it to 2018 and 2014 when we had those fairly brutal downtrends for a while and then things cooled off for a bit, and then you entered into that sort of a final leg down and then into the accumulation phase, I would speculate that Bitcoin is, you could argue, either in the latter part of that bear market or at the beginning part of the accumulation phase for the next market cycle. On a macro scale, buying Bitcoin below $20,000 is a fairly attractive price, and I agree 100%. I'm all over that DCA all day, but in the short term, we could eventually see another leg down into a cycle bottom in line with the 1 year running ROI. There is certainly a possibility that happens. So there you have it. Let me know if you agree or disagree with the crypto analysts. And before I break down our final story of the day, Bitcoin rally in sight as Bitcoin flashes a textbook bullish reversal pattern, according to top crypto strategist Kevin Svensson. But first, I want to remind you to smash that show more button right below this video in the description for a detailed analysis of what's going on in the crypto market. This goes for all 1,200 plus videos right here on my YouTube channel. Also, some very helpful resources for you to plug into, including my crypto merch store live at merch.cryptonewsalerts.net. Also, be sure to smash that subscribe button and ring that bell to turn on all notifications to receive daily premium crypto news alerts every single day, just like this. And be sure to drop me a comment. It helps out tremendously with the YouTube algorithm. And of course, you could follow me on all the major podcasting platforms, from Spotify, home of the Joe Rogan Experience, to Apple's iTunes and Google Play, as well as crypto Twitter, Facebook, Telegram, and TikTok. So wherever you're at on social media, be sure to plug in and follow me there. But all right, now let's break down our final story of the day. A closely tracked crypto strategist who continues to build his following with timely Bitcoin calls says the leading digital asset could be gearing up for a significant rally. Crypto analyst Kevin Svensson tells his 110,000 Twitter followers that he is looking at Bitcoin's moving average convergence divergence, better known as the MACD indicator, on the 3-day chart, which suggests that the king crypto is likely setting up for a sustained bounce. Let's go. Traders rely on the MACD to spot either trend reversals or continuations. And quoting the crypto analyst here, Bitcoin 3-day MACD cross will likely lead to continuation up. The 3-day candle closes tonight, which was last night. We're likely going to confirm the cross soon, which you can see here in this chart. Now, also, as far as the Bitcoin short-term market structure, Svensson says the Bitcoin is flashing a textbook Adam and Eve double bottom pattern, as he shares here. Bitcoin Adam and Eve is very clear. Looks like it is straight out of a textbook. This is a bullish reversal pattern. And looking at the lower time frames, Svensson says the Bitcoin might be trading within a bullish pennant pattern within support around $21,400. As he shares here, Bitcoin testing the bottom of the formation needs to hold this area to maintain structure, plus 3-day MACD crossing up now. And although Svensson appears to be bullish on the king crypto, he reminds his followers that Bitcoin is still in a long-term bear market. As he shares here, the trend is your friend until the ends of the trend. The short-term trend is up with some momentum. The long-term trend is down deep in bear territory. In the short to medium term, I am playing this bullish, but being cautious about a macro lower high dump later on. And this person responded, how many hours is medium term now? Svensson responded, LOL, medium term for me is 1 month or so. So there you have it. Short term is in the weeks ahead. Medium term for many of these analysts is 1 month, and long term, what, 3 to 6 months? It is what it is. And now for a quick recap, what I covered with you here in today's show. I shared with you the 5 things to watch out for in the Bitcoin market this week, as well as crypto needs regulation to mitigate risk, says Bank of England executive. We also discussed Bitcoin potentially already in an accumulation phase, gearing up for the next bull market, says crypto analyst Benjamin Cohen, as well as Bitcoin rally in sight as Bitcoin flashes a textbook bullish reversal pattern, according to top crypto strategist Kevin Svensson. But where do you feel the Bitcoin price is likely to go next? Let me know in the comments right down below. Now for the top 3 comments from yesterday's episode, Digital Gravity wrote, ETH is most certainly a security. The ICO, the insider, is getting coins for next to nothing. Vitalik being the face of the coin, the constant hard forks to switch to proof of stake, and most egregiously, the DAO hack that led to them to roll back the chain, which all shows that a small group of people call the shots. This will only get worse on the proof of stake. Also, it should be noted Vitalik sold at least 25% of his Ethereum, and to this day, Satoshi Nakamoto hasn't sold a single sat. Bitcoin and ETH are as different as night and day. Facts. Solid points, fam. Thanks for sharing with all of us. Our next featured comment comes from Jason. If Kevin O'Leary isn't happy to buy Bitcoin at $20,000, he doesn't understand Bitcoin. Haha, exactly, fam. Preach. And our third and final featured comment, short and sweet, from our very own Inner Dino. Thanks, JV. Great show. See y'all next time. As always, fam, I appreciate your continued support with the show and helping with the YouTube algorithm by subscribing, smashing the like, and dropping a comment. And to be featured on tomorrow's episode, drop me a comment right down below.